Supply and demand, everyone has heard of it, but not everyone knows how to trade it. Personally, I think supply and demand is one of the best strategies out there to use in the markets with one of the highest win rates, if applied correctly of course. In this video we'll go over what is supply and demand, how to find the right supply and demand zones, where to buy and sell from those supply and demand zones, and last but not least how I trade supply and demand. So first of all, what is supply and demand? In trading it is exactly the same as in the real life world, as in the real life economy. You have supply and you have demand. So let's say you have 10 t-shirts and you have 5 people that's demanding that t-shirt, then you have an overload in supply. If you have 10 people that want a t-shirt and you only have 5 t-shirts, then you have an overload in demand. So what does this mean? If you have more supply than demand, then the price will get cheaper automatically because they want more demand for it. And how do you get more demand? By making prices cheaper. If you are selling a t-shirt for $50 and your friend is selling one for $25, in most cases people go to your friend that is selling the t-shirt for $25. So he gets the demand and you don't, because your supply price is too high. You see where I'm going at? And of course if you have more demand for less supply, the supply price will go higher because people are willing to pay that anyway. And this works exactly the same in the charts. How can we identify supply and demand zones? So a supply and demand zone is a zone where price aggressively trades away from. So for example right here, this is a zone where price aggressively trades away from. This is a zone where price aggressively trades away from. This is a zone where price aggressively trades away from. Okay? And basically how you correctly draw those supply and demand zones on is you go to the last candle that created that big up move, basically the same as an order block, and you draw that out in time like this. So this becomes your demand zone. And remember, at the bottom is the demand zones and on the top is the supply zones, right? The lower prices, the more demand there will be to buy, and the higher prices, the higher the supply will be because there is less demand to buy that at such a high price, right? So this is your demand zone and this is your supply zone. This is the last candle before a strong move down. And by the way, you can do this on every time frame again. This is also again multi-time frame applicable, but I'm just doing on the 1 hour right now to make it real easy, okay? If we're selling, we want to see price pull back into that supply zone and then short from there. And if we are buying, we want to see price pull back into the demand zone and buy from there. Once price trades through it or trades in it, it's mitigated. This does not mean that it is not valid, but we want to see a big reaction coming out of there before we are entering in a trade. So as you can see right here, there was a big upwards move that indicated to us that this demand zone is valid. But this demand zone is now mitigated, so we're searching for the next demand zone where we can take a buy from. As you can see, this is the first candle that created a big up move, so this is where we can take our buying position. Right, I'm going into buying and selling in a minute, but this is just to show you how it works. Now we trade away from there. We have a new demand zone right here, basically the same as the old one. We come down to it, we trade away from there again. We create new higher highs. So this implies to me that this is also a demand zone, right? Because this was the last candle before a big up move that created a break of structures and higher highs. So price comes into there, mitigates it, reacts off it. Again, a strong reaction, last candle before the upwards move. And again, a new entry right there. Let's draw some more examples on right here. This is your supply zone, so you could take a sell position from there. And this is your bullish demand zone, most recent one. So you can take a buy position from there. Let's go a bit lower. This is your demand zone. Last candle before a big upwards move. This is a demand zone, and this would have been a demand zone right here. So it doesn't always have to be the lowest candle. There are also, of course, demand zones, supply zones in the move itself. But I would say the lower your demand zone is or the higher your supply zone is, the more probability it has for your trade to play out. So that's how you draw them out. Now let's go over how to trade them and how I trade them. So first of all, if you've seen the video about market structure, this is the most important thing in my opinion, and that is what we are going to do first. So in this example, as you can see, price is in a bullish up move. So basically we're only going to look for demand zones and not for supply zones because we don't want to be trading against the trend. So let's see here. In this move we have this demand zone and we have this demand zone right here. And this is where it gets tricky because you want to see price come into the demand zone and see a reaction coming out of there before it is valid. So it did do that right here. But what I like to do is to take my Fibonacci tool from the wick on the bottom to the wick on the top, and then basically only take trades that take place underneath the 50% or even likely underneath the 61.8% Fib retracement. So that's why I probably won't take this trade purely if we base it on the hourly. Then for this move we did it again. We have this zone, we have this zone, and we have this zone. We take our Fib tool, low from the move to the top of the move, By the way, this is the low of the move. Yes, low of the move to the top of the move. And then we can see everything underneath the 61.8. So this leaves us with 1, 2, 3 options. So now we're going to look, okay, are we getting a reaction of this first demand zone? Yes, we are. We're getting a reaction out of it. And this is where I would scale down to the 15 minutes. I had to use the bar replay tool for a second because otherwise my chart will move all kind of ways. So remember, the highest one is the lowest probability, this one is already high probability, and this one is the highest probability, but of course also the highest chance to get a missed trade of this. So let's see, are we getting an opportunity right here? We broke this internal high with this move right here, and we are leaving basically a lot of imbalances right here, with also a demand zone on the 50 minutes down there. So what I would say is take your trade, and take your trade of this deepest imbalance, place your stops underneath the demand zone, and basically target a 1/2. And as you can see, if we play it, we get stopped out of course, because we saw that already. But then, this is the most important thing, if this zone fails, it doesn't really matter, you just go to the next one. And let's see what's the next one is going to provide for us. A very strong reaction already, out of the zone. Okay, and right now we also broke internal structure. So I didn't take a trade right here, because we did not break internal structure. Right here we did. Now this right here, this candle is our demand zone. Place our entry, stops underneath the low. Now we can target a 1/2, or we can target the supply zone up here, because as you know, we were in a 1 hour uptrend, and a 1 hour uptrend, and if this is the point where it is going to reverse, this is the high that will be broken, right? So let's go to the 15 minutes. And of course we have seen this already, how this played out, and I don't want it to seem that it looks so perfect because I picked it this way, right? But go to your chart and test this out, test out supply and demand, and really use the way that I taught it you. The first thing that you're looking for is market structure. Then you only want to trade in the same direction of the market structure. So this way you're going to choose demand zones or supply zones, and then you're waiting until the demand or supply zone gets hit. Only take zones that are underneath the 61.8 retracement. If the first zone fails, take a chance at the next one. If that one fails, you stay out of it. Okay, let's look for some more examples. Right now we're on the 4 hour. And now I'm going to show you how I combine basically all of the time frames together. So on the 4 hour, as you can see, we are on a strong incline. So we are going to look for basically the 4 hour demand zones. Right here we have a 4 hour demand zone. Right here we have a 4 hour demand zone, but basically there's no point of me drawing this out because it is being ignored already. There was a reaction coming out of here, but as you can see, we broke straight through there. So right now, I'm basically just waiting until we are getting to the demand zone. Of course, there is a fair value gap right here, very big one on the 4 hour. But let's just see how it is going to react to this demand zone. Okay, as you can see, we came out of here with quite a strong reaction already. And bear in mind, guys, it is not going to be perfectly on the spot right here, because these are just drawings that we put on the charts, right? So sometimes it can be something like this. As you can see, if I would have taken the 2 previous candles, it would have been drawn down. So don't stick to your bias and don't stare too blindly on your drawings, I would say. Just watch the market and watch the reactions coming out of places. So let's now drop to the 1 hour and see where we can improve on this even more. As you can see, there is a 1 hour demand zone right here. Let's see if it's react on here. Then we came into the demand zone. And yes, of course, you could have traded these two. You could have traded this demand zone right here, entry. You could have traded this demand zone right here, entry, right? It doesn't have to be the most extreme all the time, but that's just what I like to do. I like to go for the more extreme entry sometimes. So now we want to see a reaction coming out of the zone somewhere, right? It's basically right here. We broke the previous internal high. So let's say we're entry on this demand zone right here, stops underneath the previous low, and we are targeting the highs. Let's see how we will do. Maybe turn this up a notch. And bam, take profit gets hit. So guys, this basically shows how we go from a higher time frame analysis. So we started with the 4 hour. We're only looking for trades inside of this zone, right? This is all noise and we're just letting this go by. I know this can take a lot of time and a lot of your patience, but if you wait for it and you wait for a perfect setup like this to happen, you are basically in almost no drawdown and you have the perfect trade. Yes, these trades take a longer while, but this is because I've entered on the 1 hour. If you would repeat the same process on the 15 minute or on the 5 minute, your trade will be a lot quicker, of course. I hope this clears up the supply and demand strategy a bit. I can go even more in depth, and I think I'm planning on doing that. I think I'm planning on making series about these strategies and making maybe 3 to 4 videos about a strategy where I go in depth about every single step of this. So if that's something that you're interested in, let me know in the comments down below. So guys, I hope you enjoyed this video. I hope you learned a thing or two from this video. If you did, don't forget to leave a like down below. Don't forget to subscribe to the channel if you're new. We're almost at 10,000 subscribers. I want to thank you for that. Maybe we have reached it already. Maybe we're still some hundred subscribers off there. Anyway, I want to thank you for that in advance already. Let's keep grinding and make something beautiful out of it. Guys, again, I hope you enjoyed, and I will see you in the next video. Bye bye.